Looking at Chipotle shares right now, under a bit of pressure, the miss on revenue and the commodity headwinds with beef and avocados has investors selling. But you didn't change your price target or your buy rating. What did you see that you liked in that report?
Well, I think one of the key important metrics that we always look at for restaurants is same-store traffic. So are more people coming? Are they buying more things than they did last year in the same restaurants? And the answer for this one is yes. Traffic continues to be among the best in the industry. It's up 4%. Plus, they still have substantial opportunity to improve that further through throughput initiatives to make the stores faster, to serve more people. So we see accelerating same-store sales from here if they can turn the dial up on that throughput.
One question for you. We talk about valuation a lot of times when it comes to tech stocks. Looking at Chipotle trading at 45 times forward earnings, bit expensive for a fast casual, isn't it?
It's not when you consider its growth. So again, this is one of the fastest growing concepts in restaurants. Even though it's been around for decades, we're still seeing unit growth that is 8 to 10%, possibly higher, as well as same-store sales. As I said, the traffic alone is at 4%, and then there's ticket growth on top of that. We look at it on a normalized basis. This is a company that could have easily 7,000 stores in the U.S., plus however many more internationally. We could see them open over the years. So we really don't think that this is expensive when you consider the growth, the returns on the stores, how profitable they are, and just how long the runway is for the company. Yeah,
investors have been willing to pay for growth. So I want to turn to some of your research. According to your data, spending at fast food restaurants increased 5% year over year in June. We also saw a general decline in inflation. And then McDonald's also going viral in June. They brought back Grimace. I thought Grimace was gone, but they brought him back. They also launched the Grimace Shake. What are your expectations for this report from McDonald's?
Yeah, so to your point, they've brought back and they've done an amazing job using their, IP, if you will, to really connect with customers. So, the marketing and the menu initiatives that they've had over the last couple of years have just been, sort of one successful launch after another, including, using Grimace. So we're expecting very strong same-store sales out of them in the second quarter, up 9%. We also expect healthy earnings growth on the basis of the 9%, the high single-digit same-store sales growth. Okay. We have earnings up 10% year over year.
So if we had more time, I would ask you what Grimace is. I could never figure it out as a kid what he's supposed to be. But more importantly, how should investors view that McDonald's has been a relative underperformer, up only 11% compared to some of its peers? I'm talking about Shake Shack, Potbelly, Jack in the Box, other names rising more than 40% to almost 300%.
Yeah, so I think, look, this is such a great company over time, very stable performer. But as we talked about, people are paying for growth. You have other concepts that are growing faster. And I think in an environment where the consumer is still spending, where we are seeing inflation come down, there are going to be other companies that are going to benefit more from that, just in terms of their, power to turn that revenue growth into earnings growth. And I think, in a year like this, people are going to want to be a little bit farther out on the risk curve. That's why we've been neutral on the stock, even though it is a great company.